Hello and welcome to tomorrow's bets. I'm Vikram Oza. This is your one-stop for a complete picture of the trading day we've had and, of course, the important cues to prepare for in trade tomorrow. That is the last trading day of the week. So let's look at how we wrapped up business this Thursday on the Last Street. My colleague BTVi stocks editor Piyush Jain is joining us with a summary. So Piyush, a good recovery on the May series expiry after the decline that we saw just ahead of it yesterday.
Well, after a day of correction, primarily because of expiry-led adjustments, today we have produced a good solid positive close on the benchmark indices. Taking a look at Nifty, almost 80 points up is where the close came, 11,950, a good sort of confidence shown by the bulls, and this is promising to be a good June series from here. Bank Nifty closed almost 240 points with the mid-cap index, small-cap index all closed in green, and it was a good sort of a sector spread. We again saw a rally across the frontline names, the heavyweight names, and that also again was promising a sort of good close, but also we are being taken into June series with some very strong sentiments there. Starting with the benchmark index, the top gainers included NTPC, Bharti Airtel, Yes Bank, BPCL. In fact, the second half was about a couple of frontline names like Infosys, TCS, Bajaj Finance, HDFC Bank. They all again produced some good gains on the bourses here. On the Bank Nifty side, Kotak Bank, SBI, RBL Bank, they all closed with 1% gains, and again it was good strong market breadth for the Bank Nifty constituents also. On the sectoral spreads, most of the sectors they closed, finished in green, but a couple of sectors like auto, metals, pharma, realty, those ended in red again, and those were the laggards here. But broadly, you will expect again IT should have performed. You would be expecting again financials along with IT, a bit of private banks, a bit of PSUs, and all those have delivered, and that's why again it was a good close. From the derivative point of view, if we can quickly name a couple of gainers, Just Dial, Adani Power, Siemens, Torrent Pharma, NCC, Tata Power were amongst the top gainers, and also again were showing some good gain in the open risk accumulation perspective also. If we sum up, and again if we take a look at the mid caps also, we saw some good gains across NBFCs, whether M&M Finance, Cholamandalam Finance, also again L&T, Alchem Labs, again all of these stocks again they ended with good gains. Now if I sum up, because this was the sort of end of May series, and now again from tomorrow we're going to start the June series. So if we again say how the June series is going to look like, it's looking bullish primarily because we've ended on a high note. It's also looking good because rollovers again have progressed well. Market-wide rollovers are higher versus the last 3-month average. That's also bullish. So from these signs, they actually are indicating that we might be hitting live high in the June series very soon. So again, bulls will be happy with this close, and the market breadth seems to suggest tomorrow should be another good day.
Thanks, Piyush. We will keep up the momentum or not tomorrow. That's the question that, of course, will be answered at the same time. But for the moment, let's welcome in our guest on tomorrow's bets with her picks and ideas. Foram Parekh joining us, fundamental analyst at Indiabulls Ventures. Foram, good to have you back on the show. Do tell us about the sense that you're getting from the markets and the direction that you think they're likely to take going into the weekend, of course, but also a little bit of a preview on what we're likely to see in the week ahead as well.
Yeah, hi Vikram, and we have seen that entire week was very nice. I mean, after the outcome of the election result, we have seen especially mid caps and small caps doing extremely well, and we believe this trend to continue. There would be small jitters from the global markets, but then back in the home country, we feel both large caps and small caps as well as medium caps are all poised to do extremely well. We have also seen Q4 earnings, pan out, and most of the companies, in the sectors of banking and infra, cement have done extremely good, and these are the only stocks which are buzzing right now in the trade. So I feel these stocks and sectors would continue to do good even in the upcoming sectors in the upcoming week, and one should have a stock specific approach, and I think it's time to aggressively do the buying, and that is why, and it would give us good 15-20% returns. So just buy right and sit tight.
Buy and sit tight. Can you do that within the financial universe right now? Because that's where the action is. And today as well, we've seen a strong show. Edelweiss leading the way with gains of more than 5 percentage points. The Bajaj twins, they've seen good up moves, and there are other counters like Cholamandalam Finance or an Indiabulls Ventures, an HDFC Life. All of these have contributed to leading the index higher. What's your sense, Foram? Will the uptrend sustain in the financials going into Friday's trade and then through the week coming up? Your strongest suggestions in this pack, and if there are any that you specifically are staying away from as well?
Yeah, so financials, I continue to remain bullish on that sector. Last time also we had discussed with likes of Bajaj Finance and HDFC Bank. All of them have done extremely well, and these are the pockets that will keep doing well even in the upcoming days. So if we see, these stocks are tad bit overvalued, but then there is surety of good earnings coming out from these stocks. So I feel that, you know, now when the market momentum is good and we have stable government at the helm for the next 5 years, consumption would be back on track, and financials would be the first sector to benefit out of that. So I feel that, you know, good earning stocks like, again, from the mid cap universe, like RBL Bank, Federal Bank, City Union Bank, all of them are trading towards this 52 weeks high, and I continue to remain bullish on these pockets. And from the large caps, of course, from the NBFC space, Bajaj Finance, the twin Bajaj Finance and Finserv, both I continue to like. And from the private sector banks, HDFC Bank, Kotak Bank, all will continue to rally despite the steep up move we have seen. I would also like to now add IndusInd Bank to the pack, because we had an overhang of IL&FS issues from the IndusInd Bank, which the management has clarified and said they do not have exposure of more than 3,000 crore in IL&FS, and that is why this is like a big breather for IndusInd Bank, and that's where we will see more upside coming in. Besides, I would say Yes Bank would be a little bit cautious, because we would have to see how the Q1 pans out to be. Of course, the new management is doing all the right things by cleaning up the balance sheet, but then we still do not have too much confidence in the bank, and we would still want to have a wait and watch approach in Yes Bank. So Yes Bank is something that I would keep aside, and rest all the stocks we have discussed from the NBFC and the banking side is what I continue to remain bullish on.
Yes, Foram, but some of that pain within the financial pack could come to more exposure to the automotive sector. If there are loans that are going out to the auto pack, then indeed that's another scary space to be in, considering the way we find our auto industry today as well. We've seen that entire pack lead the losses again. The demand slowdown continued to take a toll on the auto industry, and losses today, if you go to see the stocks, Eicher Motors, Mahindra & Mahindra, and also Motherson Sumi, besides the TVS Motor. M&M, of course, finding itself on a downtrend. After that weak quarter they reported, they've seen cuts of over 2 percentage points in trade on the stock. My colleague Bhaskar has been looking at what the brokerage calls are as far as Mahindra & Mahindra is concerned. What are they saying about this counter? Listen in.
So we have brokerages on M&M on of its Q4 results, and firstly let's see what CLSA has to say. They've downgraded the rating of the stock to underperform from a buy earlier. They've also cut the target price very sharply from 850 before to a 690 now, and what they're saying is that the outlook is not looking that good given the fact that there's waning tractor demand. The legacy SUVs are under pressure when it comes to its demand, and the upcoming BS6 implementation is also going to be a big headwind for the company. And in fact, what they're saying is that the company has a higher exposure to diesel and also makes it more vulnerable to the upcoming fuel emission norms. And keeping that in mind, in terms of its volume growth, they have a very low volume growth estimate of almost 2% over the next 2 years. And in fact, they've cut the EPS estimate for the next 2 years by 14 to 19%. And that is below the consensus of around 17 to 28%, but still they are what they're saying is that even though the valuation is quite undemanding as such at 11.4 times the FY21 PE, the stock is still unlikely to perform given the kind of multiple headwinds the company has to see going ahead. We also have Citi, and they've maintained a neutral rating with a target price of 720, a minor cut of target price from a 740 earlier, Again, what they're saying that Q4 in fact was ahead of their estimates, and in terms of outlook, it was weak as they had expected, and in fact, going ahead, they expect industry volume growth around 5%. And what they're saying is that medium-term tractor growth is likely to be in the range of 8 to 10%. While there are some positives, and in the conference call also they've mentioned that there are going to be higher investments, even in terms of the EV segment as such. And in fact, Trio, the first three-wheeler on lithium-ion batteries, it will also be soon launched pan-India, so that could be a positive. And again, they've also mentioned the BS6 impact being a major headwind, and that's why they are neutral on the stock with a target price of 720. And lastly, we have Jefferies, who've maintained a hold rating on the stock with a target price of 780. This is the highest among three, and they say that the beat in revenue and EBITDA in M&M and MVML combined was a positive. They say that this was largely because of better realizations in the auto business, but in terms of tractors, the outlook is still very cautious, and in fact expecting another decline in the first quarter. Now, in terms of volume growth, they're saying that they expect a 10% decline in domestic volumes for the coming year. And on the Java front, they've rather said that management has told them that around 5,000 unit productions is something that they are targeting by June or July, and rather management has also conveyed that they plan to deliver all pending orders by September. So keeping this in mind, there are a few positives, but again industry-wide headwinds are something that is a problem for M&M, and that's why Jefferies has a hold rating with a target price of 780.
Thanks, Bhaskar. Thanks for walking through the brokerage calls on Mahindra and Mahindra. But Foram, there is one cross-section of views that perhaps now, at a time that you're seeing some of these auto stocks and the top line auto stocks getting beaten down, that this is the time to buy. Do you come from that camp, and would you actually buy into stocks like Mahindra or a Maruti? What are your favorites, if at all you think that one should jump in right away, or would you still wait for a couple of quarters?
So I feel this is the right time to jump into automobile sector. Well, again, I would not be a buyer for Maruti, but yes, I would definitely be a buyer for Mahindra and Mahindra. If we look at the yesterday's numbers of Mahindra, despite the slowdown in the consumption space, sales have done extremely well for Mahindra, both on a yearly basis and as well as on the street, better than the street expectations. Now, the key reason for sales to do good is because they have had good product launches, and I think that is what has been a step in the right direction. Marazzo has been doing good. XUV 300 also we expected to do better. So I feel the product lines are very well of Mahindra. Of course, there are some jitters which would be there, but again, then if we look at the monsoon, we expect monsoon to be better, and that is where again demand would pick up from probably June onwards. So I feel the risk reward ratio for Mahindra is extremely favorable. There is limited downside to the stock, and that is why Mahindra should be bought at current levels. Even if we look at from the tractor space, Escort has been doing really good. The export numbers for Escort has been robust throughout the time, I think for a span of good 4-5 months now. So even Escort is a better recommendation. And if we look at the entire auto space, I think two-wheelers have continued to do good. Bajaj numbers, the monthly sales numbers for Bajaj has forever, come nice even during the slowdown in the industry. Hero Motor is coming out with many product launches, so we feel that even Hero Motor is a good buy. Of course, Bajaj and Hero are a better pick over Eicher Motor, I would say, and that is why I would be park my money in limited auto companies. But I would surely enter at current market price. All
right, so that's a point well taken. That's the camp that you belong to. Meanwhile, pharma sector. A week close. It's closed marginally in the red. Sun Pharma seeing profit booking after yesterday's rally. But also Cadila Health or a Cipla or a Bindu Pharma, they've all seen cuts in today's trade. Glenmark Pharma, now that has reacted to the kind of earnings that they reported. They've closed with gains of slightly over a percentage point. And about the numbers, we spoke to Glenn Saldana. He's the chairman and managing director at the company, to understand what the pressure points have been. Hear him out.
Last year, we spent $113 million only on innovation, and we anticipate we'll have a similar number this year on innovation. And in FY21, the whole idea is then to take Newco and capital raise in Newco, within the next 12 to 18 months, and have it fund itself from there on. So we anticipate a 10 to 15% growth, and margins, being in the 16-17% range in FY20.
So that's the management of Glenmark. Foram, I'm wondering what your thoughts are on Glenmark as a stock, and besides that, if you look at what a Sun Pharma has been doing in recent times, you see some of the other stocks that were suggested not too long ago, like Lupin. How has your take on some of these key stocks within the pharma industry changed?
Yeah, so now we have seen many pharma companies have reported their earnings. We have seen earnings for Aurobindo Pharma, for Sun Pharma, Lupin, even with the likes of Jubilant Life Science. So all of them have come with decent set of numbers. Even Sun Pharma has, been a little bit disappointing, but then it was very much expected, because even, Taro did not do good for Sun Pharma, and even on a standalone basis, Sun Pharma did not do good. So I feel that, the entire sector should be an avoid. There are too many jitters in the sector. The biggest worry is about the US pricing war, which is taking a hit on the US sales for most of the pharma companies, and this problem, I think, is going to stay for a long time. So now that we have seen there are many sectors which are giving good returns, I do not see pharma as a sector yielding us good returns if we park our money. So I think there are better opportunity cost, and that is why one should avoid the entire sector, because I feel the entire pharma pack would take at least a year or so to stabilize and then give good returns. So it's better to shift into
that's a sector that you'd like to
infra
stay away from,
or
at least for
real
the
estate
moment.
sector.
But I'm just wondering whether the opportunities that you're pointing towards could lie in media and entertainment. There has been a certain amount of traction we've seen over there. Let's specifically talk about PVR, which has seen some smart gains in trade. The stock has ended the day with gains of almost 4 percentage points. And don't forget, the Salman Khan, Katrina Kaif star Bharat, that is set to be released next week. So there is a lot that is riding on this film, and the company, PVR, is collaborating with Reliance Entertainment to distribute films like Game Over and Super 30 in India as well. Foram, do you see a great amount of potential in the distribution and the business that PVR finds itself in the exhibition space? Would you favor that over some of the other players within the media and entertainment world, like perhaps a ZTV, where there is so much buzz around the stake sale, or a Sun TV, that business, as opposed to what you're seeing in the distribution and the exhibition business?
Yeah, so I think from the entire media universe, I would only prefer PVR, because if we see the traditional business like, of ZTV and Sun TV and all, it's only doing good in the tier 2, tier 3 cities, because in the metros we have seen that, Netflix has all taken over the market share, and that is why, I think I would want to stay away from the likes of Sun TV and Z TV. Also, Z has its own, set of problems. So it's a completely avoid for me. But yes, PVR, as I had said last time also, we have various good movies lined up, and the revenue has been coming extremely well from all the releases that we had. Value added products are doing good in terms of margins. So PVR, as we have seen, the screens and all have been improvised, and I think realizations are also coming good. So on every front, volume as well as value front, I feel PVR is a better pack and a better pick, even above Inox Leisure. So I would only recommend PVR from the media and entertainment space.
All right, Foram, on that note, we'll take a very quick breather here on this edition of Tomorrow's Bets. After that, we bring up West Coast Paper, a stock that has surged over 7 percentage points. That and others coming up. Don't go away. Hello Hello again, you're joining us on this edition of tomorrow's bets. West Coast Paper. Now here's a stock that surged over 7 percentage point. The company entering into a share purchase agreement with International Papers India and Andhra Pradesh Paper Mills. Now West Coast is going to be acquiring 55% stake. They're buying it at 656 crore rupees. About this, we spoke to Rajendra Jain. He's Executive Director and CFO at West Coast Paper. And he's saying that the company is planning to raise some of that money through non-convertible debentures. Listen in.
We have a 3,20,000 ton capacity. International paper is 2,40,000. So I'll put together around 4,60,000 ton capacity which will be ready. We will be working on NCD and then internal accruals actually. It's around 500 to 600 crores. We will be raising funds through NCD. Whole process will take more than 4 months once we get all the approvals.
So that's the word coming in from the management. But Foram, what's your own understanding of the paper industry and the likelihood of growth within that, especially like a West Coast paper that we are hearing about?
Yeah, so I think it's a very good decision taken, and even traditionally if we see West Coast paper has been doing extremely well. I think the bottom line growth is also doing good, and if we see the entire sector also, there is huge demand, and I think with raw material prices cutting down and with the crudes slipping down, I feel EBITDA margins would also increase, and that is why I'm bullish on the entire paper sector, and in particular West Coast paper. I think that will come out with a good offer price also, which would be at a premium and which would benefit the shareholders. So I think West Coast paper is even one can buy at current market price.
Fair enough. But of course, as far as business is concerned, in the metals front, we've seen those trade war concerns drag metal stocks lower today. That index ended up as the top sectoral loser, and this is after auto. I just want to ask you, Foram, what your top picks are, because we're talking about the metal space, and right now you're seeing those kind of headwinds play out in that sector. I'm just wondering whether it features at all in your top bets, and if not metals, what exactly are you looking at in the near to medium term?
Yeah, so as you rightly said, there are headwinds in the metal space and it will continue to stay on and off. So I feel metal space is a complete avoid. But having said that, I feel now the next sector which would give good returns is the entire infra pack and the real estate sector. So my top picks would be one from each sector. From infra space, I would want to recommend Ashoka, Buildcon, and from the real estate space, Sobha Limited. So Ashoka FVC management is also guided for a good 20-25% growth on a CAGR level for 2 years on the bottom line, which is very positive. And even Ashoka has been getting good order books, especially in the highway side. So I think with the focus of the new government to completely have a focus on the infrastructure development of the country, Ashoka is bound to get good order books, and with extreme positive approach of the management, and with attractive valuations of trading just around 9 times PE on an FY 21 basis, I feel Ashoka is bound to give good returns even from here on. So Ashoka Buildcon is a must buy. And again, Sobha Limited, if we have seen the results of Sobha has come very well, not just from the metros like Bangalore, but also management is very bullish from the tier 2 and tier 3 cities. So I think Sobha Limited, which has done good even on a top line and a bottom line basis, where the entire sector is grappling with own set of problems and inventory crunch, I feel Sobha Limited is a good buy. Again, we have seen Godrej Properties doing very good, but then Godrej, I feel it's a tad bit overvalued. So Sobha, with terms of valuations, is also trading at attractive levels, and with positive approach and commentary from the management side, which is reflecting in the numbers.
Those seem to be the moods of the moment right now, and those are your top bets. Foram, it's always a pleasure having you on tomorrow's bets, and we hope to connect with you very soon. And with that, it's going to be a wrap on this edition of the show, but much more lined up right after taking a small breather. Keep it with us on BTVi. Thanks for joining us.